Welcome back. Let's check futures this morning, and they have turned negative on this holiday shortened trading week. Dow Industrials down 58, the Nasdaq and the S&P down a fraction. Yesterday, a complete reversal, a big rebound, and shares of Alphabet led the charge in its first day of trading as a Dow component. Alphabet was up better than 4%, and the gains continued this morning by a fraction. Comcast also rallying yesterday, climbing better than 4% on the session after announcing plans to spin off NBC Universal and Sky into its own media and entertainment businesses. The stock is up another 2.5% right now after saying the move will allow both divisions to focus on growth, all expected to be completed within a year. Joining us now to talk about markets and the macro story is Allianz's chief economic advisor, Wharton professor and Gramercy Funds Management chairman, Mohamed El-Erian. Mohamed, great to see you.
Thanks for having me.
Thank you so much for being here. So here we are at the beginning, or let's say the end of the first half, the beginning of the second half of the year. How do you see things? How would you assess markets and the macro story?
So it's been a great second quarter.
Yeah.
I think if we were here 3 months ago and we had suggested the Nasdaq would be up 20%, people say there's a war going on. What are you thinking? But that's the reality. And it shows you the strength of the tech-led, innovation-led economy that we're living in. Going forward, I'm not worried about fundamentals. I think fundamentals are strong. I'm not worried about valuations. They've adjusted. It's technicals. And in particular, there's a tug of war going on right now between our ability to attract money from the rest of the world and this incredible condition to buy the dip versus a question of where will all these funds come from for all the needs that we have for our tech companies, for our government, and everything else. So we're going to see the technicals play out, but fundamentals and valuations are in a really good place.
You said that before. I mean, you've got lots of money that was flowing into America from the Middle East. I mean, the president likes to talk about the $18 trillion that he's actually lured into America, but you're worried that with the war in the Middle East, that perhaps all that free-flowing money from the Middle East will not come to the U.S. They'll need it to rebuild their own neighborhoods.
Less will come in the short term. I want to stress in the short term. They need reconstruction funds. There's a lot of rebuilding. They also need what I call resilience funds. They've realized that they need to build pipelines. They need to reduce their vulnerabilities on the Strait. And that's a good thing for the world. We would be less sensitive to disruptions in the Strait of Hormuz.
Yeah. And let me get your take on that, Ryan, because you're invested in lots of growth stories, and you're a big believer.
Yeah, I really am, and I think that's a really good point, is now you see the rest of the world spending on their economy. I mean, take defense, right? Now, Europe needs to spend on their own defense. That means their defense budgets are going up as a percentage of GDP, and that's something we didn't really see the last decade. And those markets are just so much cheaper. I mentioned that on the show this morning, is you've got way lower valuations, better dividend yields, which I like to have in my portfolio for my clients. And if you look at earnings growth, I mean, you have record high revenue growth now looking forward on the global market. So it seems to me like, I mean, they led last year, global markets, so leading this year. You've got to have some money globally. We can't just be domestically focused. Yeah. And
what do you think?
I think he's right. Having said that, I would rather have a bigger component in the U.S. than in the rest of the world. I think what's very good, and Ryan and I were speaking about it during the break, is we've seen a very healthy rebalancing. And that is really good for investors. It helps the diversification. So I think globally there are opportunities. I still would emphasize the U.S. a little bit more than the rest of the world.
Mm-hmm. All right. Well, let's look at interest rates and what's going on in this country, because we've got the June jobs report out on Friday. I'm sorry, on Thursday, rather. It's coming out on Thursday. Markets are closed on Friday. Economists are expecting growth in jobs, 110,000 jobs added to the economy for the month. Unemployment rate is expected to hold steady at 4.3%. Now, Paula, you worked in the bond market as well, and you're watching interest rates this morning. Around 4.4%, dropping below 4.4% this morning. How would you assess the macro story and investing today?
Yeah, I think there's definitely emphasis on U.S.-based things, and I think investors are probably going to look to do that. I think we should build up the U.S. economy and these U.S. businesses. I think we're also going to see the AI development increasing here. That's something people are watching closely as well. So I'm keeping an eye out on all of that. But I do think, yeah, absolutely, this is America growth, and I want to see this country thrive and this country grow, and that's really where I see that as a young person as well.
Mohamed, you have a new op-ed out in the Financial Times. You talk about the policy divergence across several central banks. And I want to get your take on that, that, because we've got Kevin Warsh, just having done his first meeting. He's going to speak tomorrow at the European Central Bank Forum in Portugal. What are you expecting from Kevin Warsh's Fed? And tell us about those divergences among central banks across the world right now.
So I'm going to start with the divergence. It's very peculiar to see the world hit by a common shock, and yet central banks react differently. So you have certain central banks hiking, the European Central Bank, you have certain central bank loosening policy, China, and you have the Fed in the middle and the Bank of England in the middle. What will Kevin Warsh say? I suspect after emphasizing that the U.S. economy is in a good place, he's going to talk much more about the how than the what of monetary policy. He's going to speak about the reforms that he's going to pursue at the Fed and how important these reforms are for the well-being of the country and the credibility of the Fed. So look for him to focus much more on the how than the what.
Okay. And what about cutting the balance sheet? That's also something that he's prioritized.
He has, and he, and I'm really happy he's done this, has pointed out we have no theory of the balance sheet. When we talk about interest rates, we have this notion of what R star is. What is the equilibrium interest rate?
Yes.
When it comes to the balance sheet, we took it from 2 trillion to 9 trillion, back to 6 trillion, without any idea of what the equilibrium balance sheet is. And he's come in and rightly said, we need a theory of the balance sheet. And I think that's really, really important, because that balance sheet has been used in such, in my view, excessive manner that we've got to underpin it by something.
Yeah. Do you expect any rate cuts? Do you expect any rate hikes from Kevin Warsh's Fed this year?
So I would be absolutely shocked if we get a rate hike in July, and I would be very surprised if we get any rate hikes this year. I also would be surprised if we get a rate cut. I think we're going to have a Fed that's going to stay on hold for this year and wait for the inflation to go through the process.
Yeah.
We've now only left to one of the three components of inflation.
And that's basically where you are as well.
100%. If you look at inflation, if the core is at 3%, that's the historical average. We have normal inflation now. We're where we should be. Fed shouldn't do anything here. 100% agree.
All right, we will leave it there. Mohamed, great to get your take as always.
Thank you.
Thanks so much for your time. Mohamed El-Erian.